In Philippine real estate, size defines more than just the skyline. It shapes how empires and portfolios move. Consider SM Prime and Robinson's Land, two giants, each making a different bet on how to grow, withstand shocks, and seize opportunity. SM Prime is the empire of scale, a vast operator whose presence is felt from the iconic Mall of Asia complex to the busy hubs anchoring provincial capitals. In the first quarter of 2026, its revenues surged to 33.3 billion pesos, with net income holding strong at 11.9 billion pesos. Its balance sheet, now at 1.11 trillion pesos in assets, rivals those of the nation's largest financial institutions. By contrast, Robinson's Land looks less like a single fortress and more like a well-connected archipelago, smaller, with assets of 286.4 billion pesos and revenue of 12.3 billion pesos, yet notably nimble with a net income of 4.4 billion pesos. The story isn't just about numbers, it's about fundamentals. SM Prime's core engine is the mall, a near indestructible source of cash, contributing 3/5 of group revenues and 9 billion pesos in net income for the quarter. For RLC, malls remain central, but account for a smaller slice. Offices, residences, hotels, logistics, and estates all share the stage, creating a more balanced mix. Segment performance in Q1 reveals much. SM Prime's revenue inched up, yet growth was steady rather than spectacular. Its rental income strengthened, but real estate sales softened, weighing on overall momentum. RLC, meanwhile, gained speed. Rental income climbed, real estate sales soared 40%, and hotel operations thrived. While SM Prime relied on its massive mall base for stability, RLC's diversified engines all roared together, delivering growth beyond its size. Scrutinizing the segments further, SM Prime's malls are machines. 20.4 billion pesos in revenue, 15 billion pesos in EBITDA, and 8.8 billion pesos in net income for Q1 alone. They are not just retail spaces, they're urban infrastructure, platforms for marketing, and anchors for development. RLC's malls are impressive, but live in a different league, generating 5.1 billion pesos in revenue, with same mall rentals and traffic showing solid gains. Here, SM Prime commands scale. RLC demonstrates agility. Residential property, often the wild card, told different tales. SM Prime saw revenues and net income drop in this segment, a rare blemish for a company counting on residential bursts for incremental growth. RLC's residential segment surged instead, with sales up 40%, highlighting that even in cyclical industries, diversified timing across portfolios creates opportunity for outperformance. Looking at offices and hotels, RLC's commitment to diversification stands out. Office revenues rose 8%. Hotels jumped 14%. Even logistics, though smaller, ticked up. SM Prime's equivalent businesses performed well, but remained satellites orbiting the mall. Good earners, but not the defining story. Financial structures underline the contrast. SM Prime, built for expansion, carries significant leverage to match its ambition. 426.1 billion pesos in total debt, with large-scale assets fueling future returns but exposing it to refinancing risk. RLC keeps a lighter profile, lower debt, higher cash reserves, and a net debt-to-equity ratio below 10%, giving it flexibility if market winds shift. Capital expenditure signals intent. SM Prime spent 15.5 billion pesos in Q1, building at imperial scale across all divisions. RLC, by contrast, spent 2.1 billion pesos, leveraging capital recycling, such as REIT monetizations, to fuel growth judiciously. For investors, the message is instructive. SM Prime compounds scale into dominance, producing resilient, predictable earnings, though its vastness can amplify both strengths and weaknesses. Robinson's Land compounds through mix, smaller in every metric, but with a broader, faster-growing base and a more agile balance sheet. One is a metropolis, impressive, steady, but sometimes unwieldy. The other, a dynamic cityscape of varied assets, less imposing, but better equipped to adjust with the tides. As of Q1 2026, neither model settles the debate, but the landscape is clearer than ever. Greatness in Philippine property comes in many shapes. Strength is found not just in scale, but in the artful balance between mass and motion.